Hello and welcome to our special Budget 2025 series where we bring you expert insights from industry leaders on what to expect from the upcoming union budget and how it may impact your investments. Now, today we have with us Ajay Khandelwal. He's fund manager and executive group vice president at Motilal Oswal Mutual Fund. Welcome, Ajay.
Thanks a lot.
Now, let's begin with our first question. It seems that the government may miss its Capex targets this year. So, what are your expectations for the next fiscal's allocations and which sectors should be prioritized?
So, this has been an interesting year. I mean, with the kind of state elections that has happened, the spend which was supposed to be around 11 trillion rupees, I think we'll end up doing 10 odd trillion rupees. So it's interesting in a way because the money that was supposed to be spent by state governments, there I think the spending is not happening. So almost the budget allocation increased by almost 1 trillion rupees, which is 1 lakh crore. And there the spend is not happening. So in a way, I would say that I think given budgeted numbers are at 46-45% and what 5.5 lakh crore that we spent, I think in next 2-3 months we should see the spend. And also for next year, I believe that we are at a juncture where I think anything above 11.5 trillion rupees is a good number. Because see, the point is even at 4.5-4.6% current our deficit number, the interest rate differential is low. So even if we are looking at interest, the kind of inflows, but because the differential is low, we'll not get that kind of flows. So I think it is very important that government should focus on doing more Capex spend. And the sectors, because see, most of the spend goes into defense, railway, and roads. Now, defense and road spend is 15% lower than what was anticipated. It is only the railway which has seen the similar kind of spend which was expected. So I think clearly it is required that in next budget, I think we should have more spend towards Capex, because it clearly has more multiplier effect, and at this point in time, we clearly require that.
Ajay, do you expect any changes in the income tax or the capital gain tax in this budget, and how they might impact the investors and market?
So see, every time we wish there is more income tax deductions we should get. I think the way especially consumption is happening and the way household leverage has gone up, clearly people require more money to spend. FMCGs have been struggling to grow at single-digit kind of volume growth, and this has been happening for quite some time. So we want, I think, the spend, especially there is, I think, talk going on whether we may increase the slab from 7.5 lakh crore, 7.5 lakh to say maybe 9-10 lakh rupees. But I think again, because government wants to be cautious about it. So we believe that I think it's a mix of both, giving more money to the households and at the more spend from government, which is the need of the hour.
Right. Now, what key measures should the government focus on in Budget 2025 to boost growth, attract investments, as well as drive sustainability?
I think this budget is also important from the fact that there are a lot of changes happening around the world. And they will have direct and indirect impact on Indian economy. For example, it is not just the, say, US increases the tariff on certain products from India, but there are also indirect impacts where maybe the US is now, for example, coming out of now Paris Climate Treaty, or some of these measures where they're reducing spend on certain where they were spending, that will also have an impact on industry. So I think in budget we require support from manufacturing. I think the PLI spend for which was envisaged, I think from 21, hardly 10-15% is being spent. Electronics is the only one, I think, where industry has actually been able to deliver and take advantage of PLI. But I think the PLI has to improve for other sectors so that the involvement of other sectors should also improve. So in terms of manufacturing, we clearly require support. In terms of improving job, I think the internship program, which was envisaged last year, it has not yielded results. So that also needs some kind of help, so make it more conducive to the industry. Some of these emerging technologies, I think they require a lot of R&D spend to be done upfront. So I think they require that kind of incentive to put up that kind of spend. So because if we have to be globally competitive, the businesses need to spend on few of these things such as R&D and putting up large capex upfront. So we require some support because I think the way things are changing, there would be demand and supply shocks. So we need to be prepared. I mean, apart from budget, see, liquidity is also fairly tight in the economy. So there also, I think, but that has nothing to do with budget. But I think we require some of these measures which will give confidence to the industry to put up capex upfront.
Ajay, how do you see the global economic conditions such as interest rates, trends, or the inflation influencing budget policies?
So as I said, see, this will not have direct impact on budget. But if we believe that we require foreign capital, especially in the debt market, given that our bond inclusion from JP Morgan Index already happened, money has come, I think the difference is low compared to what it was earlier. So anyways, we have to rely more on domestic factors. So I think more than global, we need to be prepared that way. But how things are shaping up, if the drilling continues in US, then you can expect oil to be below $80. So that will help Indian economy. I think that way, I think our inflation and interest rate and currency has been fairly resilient. So from budget perspective, I don't think there'll be any changes. But overall, from economy perspective, these are some of the measures which are required at this point in time.
Before we wrap up this discussion, if you could share what key themes are you currently betting on and why so?
Right. So for us, I think the earning growth is extremely important. What we look for is that industry should have tailwinds. Industry should have large addressable market, and there are enough good opportunities to capture that opportunity. So our focus is on finding out those kind of industries. So if you look at, as I said, manufacturing is something we believe is a multi-year growth story. So on the business to business side, I think we are clearly banking on that. On the consumer side, we clearly see that discretionary spend where Indian economy is, this will continue for next few years. So I think the discretionary spend is something where we have aligned our portfolio towards. And in terms of few sectors where we are seeing now, finally, the demand supply situation is getting attractive. So we are looking at certain sectors where now, finally, after 2-3 years, things are improving. So that is where I think our portfolios are aligned. And I think our focus has always been to find these high growth opportunities where the quality of earning is not compromised. So I think this is how our portfolios are placed.
All right. Well, thank you, Ajay, for sharing your thoughts with us. To our viewers, stay tuned as we continue to bring you expert opinions and analysis in the run-up to Union Budget. Thanks for watching. We'll see you in the next episode. Thanks.
Thank you. Thank you. Pleasure.